Hello there and welcome to this CNBC Africa special. I'm Eugene Anangwe. Now, following Rwanda's Vision 2020 and the Smart Rwanda Master Plan launch, Rwanda is actually envisioning becoming a cashless economy by 2020, with all government financial transactions being done electronically and via mobile phones. The country does target to go completely cashless by 2024, with only less than a year to 2020 and less than 5 years to 2024. What will be needed for Rwanda to achieve this ambitious goal? In this CNBC Africa special, our panelists will be helping us discuss this and much more. Let me introduce them. We have John Karamuka, who's actually Director of Payment Systems at the Central Bank of Rwanda. Thank you for joining us on the program. Also with us is Isaac Ngusi, who is a money management consultant and a financial literacy expert. Thank you for joining us on the program.
It's a pleasure.
And also with us is none other than Amit, who's actually Managing Director, Airtel Tigo Rwanda. Thank you for making time on the program. Now, let me start first of all from John here, as the regulator of financial institutions here in Rwanda, Central Bank of Rwanda. 2017 was actually reported to have been a very important year for Rwanda as far as its journey towards becoming a cashless economy is concerned. Can you kindly break that down for us? Why you think 2017 was seen as a very important year for Rwanda in this line?
Thank you very much, Eugene. I think what I can say, first of all, is that the government of Rwanda has engaged to ensure that we really move to, we started this journey towards cashless economy, and we believe that we can achieve that, though it is not easy. So cash is still king. So when I'm talking about cashless, so there is that debate on whether saying that it should be total cashless, but what we are saying it should be less cash.
It should be less
cash.
Right.
And that's very important. So when you look at where we are coming from, we can say that we've done a lot of work, and we are also coming up with a new strategy. In fact, there is a new strategy on payment, which was approved by the cabinet last year in October, so which goes up to 2024 with clear indicators and actions, what we can do to fast track the journey towards cashless.
What are the two major highlights in this strategy that you can share with us?
In fact, when you're talking about the cashless ecosystem, we can look at it different, I can say maybe four pillars. First of all, it's about infrastructure. Do we have sufficient infrastructure to support the cashless transactions? Second is also the adoption. Once you have the infrastructure, the service in place, how people adopt the usage. Third is also about coming up with what I can say institutional and the legal infrastructure or framework that support or give confidence to the population to build the trust, because when it comes to money, trust is very important.
It's very key.
Yes. Yeah. And lastly, what I can say is also on the innovation, because whatever we are achieving in terms of digitalizing our economy is through innovation and change. So what do we do to fast track or to continue support innovation in order to get new products that support that vision? And
it's important you give us these pillars which will anchor this conversation on in the course of this discussion. But let me come back to you, Ngusi. Isaac, John says it here very confidently, cash is still king. And probably the argument today or the debate is whether going cashless is what we need, or we still have a mixture of both. Or some people are saying it doesn't matter. As long as I'm able to carry out my transactions, I don't care.
I'll just touch on the usage part of the usage pillar of what was just said. From a personal finance management point of view, going cashless is extremely efficient because it is a lot easier to track digital payments than it is cash. It's a lot easier to determine where your money is going. Again, from a personal point of view, many people get their paychecks towards the end of the month or whenever payday is. And 1-2 weeks later, all the money is gone, or a vast majority of it, and we kind of feel like money pours through our fingers, especially cash. Digital payments, digital solutions offer us an opportunity to track where our money goes and control the way we spend our money, especially if we're focusing on increasing savings.
Right. Talking of the money slipping off our hands, especially cash, as you say, using your own words, some people who already even have their money in their accounts and they can access that money through their mobile phones still claim that the effect is still the same, because one moment I'm just having these millions in my account, and after a few days it's all blown out because I'm able to still access it through just a click of a few buttons on my phone, and I'm buying airtime, I'm buying cash power, I'm buying drinks for friends. And so that particular argument being, rebuted. I mean, how do you
We can't say that cash is entirely at blame when it comes to how quickly or how frivolously we might consume our money resource. Mm-hmm. The reality is, though, or there's a saying at least, that cash burns a hole in my pocket. Mm-hmm. Or burns a hole in my wallet. If I have it on me, there's a higher or greater likelihood for me to use it when people invite me to do things. Right. Now, that doesn't mean that entirely cash is to blame. There is an element of literacy and education when it comes to finance. There's an element of understanding the importance of control, restraint, budgeting, planning, when it comes to the way we excise our financial imperative, personally, on a personal level. But of course, when we're talking about policy, what people are doing as individuals in a nation, what the masses and the citizenry is doing has a massive effect, of course, on the economy.
Let me talk to Amit here, because Amit, just a few months ago, there was a merger. There was Tigo, and now we have Tigo Airtel. Tigo originally had its own mobile money customers, and today you've seemingly consolidated that to make this one huge network. But traditionally, mobile telecom services providers have always been thought to be in the business of just ensuring I'm able to make a call from point A to point B. And they were never in the business of money transfer, money this and that. Tell us how this is revolutionizing the way we're using our mobile phones and the way it is actually happening from your side, from where you sit at Airtel Tigo.
Thanks, Eugene. I think what you said is right. We had Tigo Cash customers, and now we have Airtel Money customers. So it's effectively, we have merged to search, if I may say so. So we are a larger, a much stronger customer base, a bigger company in that sense. Having said that, I think you're right that the traditional way of doing mobile business was selling and buying airtime and talking on the phone, internet. But I think as time has gone by, we are always looking at newer avenues of raising our revenue bars. That is one. And secondly, to be able to serve the society at large, and also be able to be a very strong, intender to do cashless economy. I think that's where we are bringing about a change. And as you rightly said, while Eugene was saying and you were also saying, I think what happens is over a period of time, the same instrument can become your bank or your ATM, as we call it. So, and we've seen a lot of changes coming through over the past 2-3 years, wherein mobile financial services is picking up really, really strongly. And people are able to, very easily transact. It is very convenient, it is accessible, it is safe, and it saves a lot of time. Right. So traditionally it would happen that we would find farmers. This is the agriculture economy. So if you take the classical case of a farmer, he would have to stand in queues after harvest to get his gains. And now it can be done in the confines of a home. Right. And it's so comfortable and easy.
Right. And you speak about the comfort that it actually brings. But this also brings us to the issue of the know-how, the awareness. And sometimes I wonder whether that is the missing gap or not. Because today we've seen mobile telcos like Airtel, like even MTN, they have even been promoting the fact that you can be able to do certain important transactions, including filing for your returns in terms of even paying for them. But we've seen when we are moving around the deadline, we see banks with very long queues. And someone has been wondering, or you might wonder, why wouldn't these people just go to a ATM, I'm not ATM, MTN or Airtel to go, money and just pay this over there? What would you blame for this? Because the financial literacy or just the culture, what is missing here? Let me start with you, John.
I was reading what we call Network Readiness Index that was published by the World Economic Forum.
Yeah.
Yes. When you look at what they say about Rwanda, so in terms of infrastructure, we are ready. We've done a lot of work, even if we still have some gaps. But when it comes to adoption and the usage, we are still lagging behind, and we think that's where we must put a lot of efforts. This is about culture, and cash-based culture has been there for quite a long. So changing the mindset is not something easy. That's why the central bank, along with the industry, we've been coming up with a different campaign to educate people. In fact, we had the largest campaign in 2017. So we are carrying a second phase from March this year. So we know that in terms of education, in terms of empowering consumers to understand and be able to understand how to use digital infrastructure is key. Right. And when we are talking about using digital infrastructure in terms of literacy, everybody is included. Even someone with a PhD may be digitally illiterate. So we are running this, we are discussing, come up with an education program, but also to see how also we can incentivize them to join this and understand the merit of using the cash. Sometimes we may find that it's a matter of ignorance. Yeah. When you talk about maybe paying a certain fee, which may be say 100, so they may just skip it, but they forget that they are paying for a bus and the time. Yeah. Yeah. So that's something we need really to educate, to understand the merit of going cashless and the cost of cash.
The cost of cash.
For everybody, in fact, not only for central bank, government, financial institutions, the business. Let me just give you an example of the business. In fact, when we had this campaign in 2017, we are meeting with different businessmen, which we call normally merchant. And we are happy to learn from one of them, giving us the experience of what they are losing in terms of managing cash on their end. And that was very important, and it changes even where the perception of how you
should run their businesses. Isaac, he mentioned that we should incentivize these people, make them aware that actually you spend even more when you think that you will spend extra by using your mobile money or any other cashless transaction methods. But this brings us to the issue of whether we should imply or impose a carrot or stick scenario. What would help here? Because we've seen some banks saying if you come to withdraw cash at the counter, you'll be charged an extra fee, and that is the stick. And someone says if you go use your ATM card, it will be free of charge, or there's a smaller fee to that. Carrot or stick? Where do we go?
I think it's incumbent on both the regulator and on service providers to educate the customer in this case. Because just like was just said, cash has a cost. Creating money, distributing money, controlling money, it's expensive. And on the other hand, digital solutions make it so much more convenient, but also so much more affordable for everyone involved. The question is, how aware are the consumers about these facts? How do they associate the trends of cash, their culture around money? how is it associated with this new information? And who is responsible for continuously providing this information to the end user? And it has to be, for me, it has to be regulators, and it has to be the companies and organizations, the business sector that is providing these services to the public.
Right.
And it can't end.
It has to be continuous.
It has to be continuous.
I mean, what are you doing from your end in terms of creating awareness in this sense?
Sure. I think most part of a very literate country like Rwanda, I feel, and a very exposed country like Rwanda, I feel, most of the citizens are aware of what is mobile money or what is e-money. But I think the level of understanding of what you can use it for is something that is a challenge today. And in the same vein, I would say it is an opportunity. Now, having said that, I feel a lot of things need to be done from the MNO, which is the mobile network operator point of view, wherein we need to educate the citizens at large. And it cannot be restricted only to P2P payments, but it has to go and cover the entire ecosystem, which is making new merchants, ensuring that all services are digitalized, the payments, whether it is cash in, cash out, whether it is loan payments, whether it is overdraft facility, whether it is paying on basic amenities of life. I think the entire ecosystem has to be developed. And I think MNOs, along with the regulator, plays a very vital role. And I think I would like to compliment the central bank here, wherein they have recently launched an e-payment system which covers all the stakeholders in the finance industry, and in terms of educating the customers, educating the merchants, ensuring that this is spread all across. I mean, it's a slow burn. I would not say it would happen overnight,
yes.
But I think we are on a journey,
right.
And once this is done, I think the need of cash may not reach the goal of being cashless immediately, but I think less cash is the way to go, and then followed by the cashless. So right. I think that's the way we need to go there.
Maybe just to add something, because you talk about carrot or stick.
Yeah.
I think what is important here is, first of all, to build the trust.
Yeah.
Because
so you feel trust is still an issue?
No, yes, we've seen some development, and when we look at the statistics we are just seeing good numbers and more adoption, which is good. But I think even for those who think that that trust is not yet there, so it's up to us to build that. That's one. And also another part which is very, very important from the private sector side, especially when it comes to build that convenience. If we must convince people that when I'm doing a cashless transaction, I will get a better benefit than when I'm using cash, and that's very important, because if we want really to fight against cash, we must get a substitute. A better substitute, if I can say.
Not just the saving of the transport or the little money which you end up using on the transport.
Yes, and that's what we are building, that ecosystem. What CEO of Airtel was saying here, we've come up, for example, with a comprehensive interoperability where people will be able, whether you are a customer of a microfinance, you are a customer of a bank, of an MNO, you'll be able to transfer funds without any problem. And we are coming up with not only just linking, but also bringing also products. In fact, we are bringing what we call instant payment. So when I'm paying to you remotely, immediately you get value of your money, and you can use it for other businesses. So we are coming up on the supply side, coming up with those infrastructure framework that will push people really to appreciate the services that are already in place.
But we've seen people argue and say probably let's go to what actually is mostly used, which is actually mobile money transactions, really growing. We've seen some people complaining and saying these operators are just locked up within their egos. And what is stopping them from actually allowing that interoperability, whereby whether I am on Airtel, Tigo, or I'm on MTN, I can still be able to send you money without any particular challenge. I must not go, which network are you on? Tigo. Where is your Airtel line so that I can send you the money?
This is no longer a challenge, I think, because
this is no longer a challenge.
Yes, because we've been discussing this, and I promise you by June.
By when? June.
By June this year, we must have a full interoperability.
So whichever platform you're on, you can still transfer money.
So if you have an account in a microfinance or in a circle, you'll be able to transfer it to any customer from another.
What was taking us long to achieve this?
I will tell you, as we talk about growing business, this is also a plus for us.
Yeah.
Having said that, there are some challenges. See, as I said, the understanding, and also from a human tendency perspective, if I am a customer, I would definitely like to go to a bank and withdraw money. I would like to know that my money is safe in a bank account. There's a brick and mortar system where I can go to, and this concept of the money being on a mobile wallet is not very easily acceptable and acknowledged. That is why I think the learning is very critical. And then as we talk, it is also about compliance. I think we need to ensure that along with business development of interoperability and also merchants, I think more important is also compliance. We need to ensure that we are fully compliant as far as a mobile network operator is concerned, in terms of knowing your customer, having the right details, having foolproof systems, so that things like losing a finance partner are avoided, anti-money laundering issues are not faced. So I think all of this puts together, I would say we have come across a journey, and I think as John rightly put it, it's not very far away when we'll see interoperability across platforms a reality.
And you can confirm that also by June, as it says, this will be working.
Yes, we are working together.
Right.
As I said, BNR has helped us with the e-platform, which is a common platform, e-payments platform, wherein it covers the entire ecosystem. And that's where interoperability is being driven, and I think we are all obliged to comply and abide by it.
Right.
But what I can also add is that the market is also maturing. And when it comes to payment industry or business, there must be a balance between competition and the collaboration. So what we appreciate today is that now, when we look at different players in the market, they understand that concept of competition, just the coexistence of collaboration and competition.
So they're moving away from competition to
it's
now
not. It's a balance. Yes. You must know where to compete, where to
complement each other.
Yes.
Okay. But of course, even as we move towards this, there have been several factors that have been deemed as creators or obstacles to actually doing e-payments, and one of them that is making people say that I'd rather be with this cash in my pocket or wherever it is than rely on this is the issue of dependency and the convenience in terms of reliability. Someone says, today I'll go to the ATM machine and it just tells me out of service, and yet I have an urgent need for that particular money, and so I need this money in my pocket rather than putting it in my account. How is the central bank ensuring that we have these systems working and they're fully oiled in a way that they're not creating these inconveniences?
In fact, that's what I was saying, that we needed to create, and that's something we started working on, that to build that trust and maintain it. So we need, first of all, to make sure that we have services that are convenient to everybody, and that give assurance, so that when we are going to, you are sure that when you are going to do a cashless transaction, you don't need to have a backup in your pocket. Yeah, because the transaction can fail. So how do we make sure that the service denial is addressed as a challenge?
But John, what you're doing is you're asking me questions.
Yes, no, that's I'm coming.
I'm looking for the answer. That's what is actually happening from the BNR point of view.
Yes, that's one of our job.
Yeah,
is to make sure that we have efficient, effective and efficient infrastructure in place. Yes, because for example, what we are talking about, these ATMs, we normally monitor the report on the availability rate. We must have a certain standard to ensure that we give that service to
so
the
if a bank ATM is always not having money, what happens to them?
Yes, we have. Yes, we have different regulations. Yes. Once this doesn't happen, so we have different regulatory instruments that can address that.
Right.
I think
Second,
to add on to what John is saying,
Yeah.
I mean, the basic idea is that mobile financial services are very complementary to banks. Now, as we all know, the cost of operating a branch or the cost of operating a ATM, cost of printing currency, cost of printing coins, I mean, it's a no-brainer that we all at certain point of time want to come out of it. So I think what we need to do together, and what John is also pressing as a point, is that we need to be very complementary and supplementary to each other. That is, if you have a bank, along with that you also have an agent who's a mobile financial services agent from an MNO. So if, for example, if there is a technical glitch and you're not able to get the amount of money that you want from an ATM, at the same time you also have an agent of mobile financial services wherein the transaction can be done at the drop of a hat.
Yeah. Okay.
So I think that's what we.
That's what you need. Isaac, also, as you jump on that, there's been reports of decrease or decline in the number of ATMs or even the usability of these ATMs. Do you think this is a deliberate move? Because at the end of the day, what do we need ATMs for if we want people not to walk with cash at the end of the day? Because if you're going to the ATM, you're going to actually withdraw the cash. So do you think this is a deliberate move to actually push people to use their credit cards, debit cards and stuff like that?
I personally don't think it's a deliberate move. I have no supporting evidence for that. But I think that one thing that the market will clearly dictate is that if a financial service is more convenient, I will favor that convenience over any other service. So if I'm withdrawing, or the purpose of my withdrawal of this cash from the ATM is to make a payment, and yet I can sit in my office where I'm busy and I'm trying to get work done and transfer funds from my bank account to somebody I need to make a payment for, make a remittance. I think that that's always going to win if I know the competitive advantage between withdrawing money from an ATM, which, like you said, comes at cost, or with a cost, I mean, or transferring money digitally with both the convenience and the cost cutting. But
it's something very important, because we have statistics. So when you're saying that ATM transactions are declining, so we have to ask ourselves where are those transactions are pushing to. So we find that now we are seeing, for example, other now non-cash transactions going up in terms of point of sales, internet banking, mobile banking. So when you look at today, for example, merchant payment, not only from the traditional point of sale we are used to, the physical one, but also we are seeing the mobile merchant transaction going up. And in fact, it is going even to surpass the card-based transaction. Yes. So we are seeing that shift from really the cash-based through ATM, where people used to there was an ATM close to Nakumatt. In the past, people were going to withdraw from an ATM, which has a cost, in fact, and they go to Nakumatt to shop. Yet the transaction is free of charge. You are not charged because of that. So today, people have understood that, and more people now are shifting from just using an ATM. Even banks themselves, they are no longer investing much in ATM, because we have, as he said, agent network which can serve better than
I wanted to go that thought, Isaac. Okay. And I want us to pick it up from that particular one, where cash is actually continuing to be one of the preferred modes of payment or transactions. And one of the reasons people say is that we fear going online or using e-platforms because of cybersecurity, which is actually on the rise, and Africa is not being spared, so is Rwanda. From the central bank point of view, what is actually being done to mitigate the impact of cybersecurity to allow people to safely go on with the e-payment processes?
Thank you, Eugene. As I said, we are going toward a digital economy. It's not only in a payment realm, but the entire economy. So cyber security, data protection, and privacy is key, and we need really to pay more attention on that. And we've done a lot of work in terms of ensuring that we have proper regulatory requirement for all service providers to ensure that at least they comply with the certain standards, which is very important. Second, it's also about educating the service provider themselves, even their staff. Because when you're talking about cyber security, it's not just about technology. Yeah. You'll find that maybe the victims are also part of the process, because if you're not, you expose your password, you expose your credentials, then you'll be a victim at the end of the day. Yeah. That's on the side of the supply side, but also educating people on the other side. How do they protect themselves against any threat? So that's also very important. So just to say, we've come up with a list of requirements to ensure that we come up with what we call a risk-based regulatory framework, where we see more risk, we come up with more stringent requirements, yes, and where we think that maybe we need to relax a bit because there's no much risk, so we come up with less stringent measures. So, but what is important here is not only about coming up with a regulatory framework. It's also about that awareness. What we've seen that even the service providers themselves, they are aware of the threat which is we are facing when it comes to digital services. But up to now, when we look at the statistics and the incidents, we can say that confidently that we are doing well, because we didn't have major incident, and even some cases we've had is just because someone has shared the password, and yes, it's the PIN, etc. So those are some cases we are seeing, but we know that we need also to invest much to come up with an institutional framework which is solid to cope with any threat that can come.
Right. Isaac, what sort of measures then do you think should be done? We've talked of the people in authority, but let's talk about also the citizens themselves, the users of this. What do they need to be doing to ensure that they are safe as they do their transactions cashless?
I'm always going to come back to education. I think that, especially as we talk about developing culture around money and developing new mindsets and new points of view, education is critical. If we're investing as end users, as consumers, in informing ourselves as to what's the most efficient way to go about your financial transactions, especially aided by all the information made available by our public and private sectors, I think that we need to invest in our children. I think we need to start breaking away from traditional mores or traditional taboos around talking about money on the dinner table, or talking about money to your children as they go to school, or practicing real world experiences with these young people. I hear so many stories about schools, primary and secondary level, where children are allowed to interact with money on principle because somehow this is bad or dirty. And we know that this is part of a cultural experience. It's been here for a while. It's not just Rwanda. It's prevalent globally. So I think that one of the first things that we need to do, in addition to our regulators coming up with financial literacy campaigns for the public, in addition to organizations in the private sector coming up with customer education campaigns, we need, as nuclear families or whatever size families that we are, we need to start implementing and employing information and education within these small units, grassroots levels. In order for us to educate ourselves, education is key, it is power.
Right, education is key, is power. I mean, what is actually being done from where you sit to...
Taking a cue from what Isaac and John said, I think understanding of what it entails when you're doing cash transactions on the internet or through a mobile, or you're taking a loan, or you're taking an overdraft facility, or you're taking insurance. I think one is clearly cognizance of what you're getting into and what are the real ways of safeguarding yourself. Like John touched upon the username and password sharing, which comes across as a very simple thing, but it can lead to very severe consequences if you don't keep a track. Second is, from an operator point of view, I think we need to have the robust systems, be it the integration of IT and network systems with the back-end platforms as guided by the BNR. Second is the proactive real-time monitoring systems. Third is ensuring that each service is being monitored very closely. There are enough alarms within our network to raise issues whenever we suspect some anti-money laundering happening or some money being transacted. Ensuring that there are ranges of what transactions should be done. Just like when we do internet banking, we have a limit to what can be transacted, or even if you are transacting on a credit card, you have limits. Similarly, ensuring that the limits are within range, and proactively checking your systems are in order regularly. I think these, and then I think it is more of user-based interface which comes into place. So once you start using, then you start, as a customer, you also start knowing that, these are the precautions I need to take when I'm dealing with a mobile service.
Right.
Having said that, at the same time, I think it's not just about cash, it's also about various utility services. So the more you talk about it and the more you start using it, the more comes the confidence. I think there are many such developed countries wherein we have seen that they are completely cashless. I mean, we talk about some other countries wherein only 1% of the total economy is on cash. The rest, 99%, is completely cashless. And I think they have traversed this journey. We are on that journey. And the more people start, I think we have a very active role to play as mobile network operators, and being a big, large brand in this country, and with such a solid and a big database of customers. I think we have to embrace the entire ecosystem. Be it health services, be it hospitality, be it buying grocery, be it transacting money internally. I think if we start ensuring that all the systems are foolproof, which we are doing constantly, I think then it will be very easily accepted by the consumer.
Right. But before you come in, Isaac and John, I just want him to first respond to one of this major concerns that I've seen or heard from various people, for the sake of not downplaying the fact that there are still charges that are pegged on these cashless transactions. For you to send a certain amount of money, there is a charge which is actually, put in there. And so someone decides, why should I actually allow this money to be chopped off of my money? I'd rather just take a bike and come, or just on foot and come and pick that cash instead. Just give us the logic here. How do we explain this to people who have this kind of perception, that it is still better for you to transact cashless than go pick that cash because you're afraid of that extra charge that will be levied on you?
It's truly a perception, if I may say so. If forget about transacting or sending money or receiving money between cities, just within the same city, there's a cost of transportation, there's a cost of fuel. And if you compare the different slabs we have on cashing in or cashing out money or P2P transfers, I think it is very, very less compared to what you would normally spend while transporting that money or while spending on fuel. And not to ignore the time lost and the energy lost in the midst. But I think it's more about education, that the charges that a telecom company specifies or are deducted on every transaction basis the volume of the transaction are much, much lesser if we do the maths around it. So I think this is more regarding, this is more of a perception and a misconception, if I may say. It's a myth, I would say.
This is very important. It's a good question. What I agree that you can't have a free of charge.
So there's nothing you can do. You can't incentivize some of the equipment so that they cut on the cost of business.
What we agree is that because maybe when you look at the stage where we are today, we are still at the investment phase where maybe some costs are still high. But with volume of transaction, with economies of scale, maybe the cost will go down. That's why maybe as more people are embracing cashless, even the transaction will come down. That's one. Second is about also the technology. Because when you are seeing whatever you're seeing in terms of innovation, technology innovation, business innovation, processes innovation, so are also affecting the cost of these services. So in the future, we are expecting to see the cost going down. Yeah. But it can't be zero.
It can't be zero.
Yes.
Wow. Isaac.
I think in addition to what Amit said earlier, there's a difference between customer education, knowledge, and understanding. Yeah. I'd like to rope in this conversation the need for banking institutions to start picking up different services and use cases for digital payments. Because again, if we are having frustrations not only from necessarily not being able to access money in ATMs or not having access to your money in whatever way, if I'm not able to transact, transfer, push and pull money from my bank account onto my mobile wallet.
Because the system is down.
Because the system is down, because the network isn't good. No, that's not a banking issue. For whatever reason, we're adding frustrations and we're limiting the end users' experience with this payment platform. And of course, as the experience grows, we learn to understand these systems better. And of course, as John said, that the price, economies of scale, the different services available.
I would also say that there are a lot many precedents and lot many examples that we have on the table today. Be it the Tea Farmers Association, which we did at Mulindi and Sagasha, or be it the Motorbikes Association that we have here. As you know, we have the largest transportation mode here we have is the motorbikes, as well as the public transportation, which is buses. Now, if what we are trying to do is we are trying to ensure that the incentive is there, that the customer transacts with the motorbiker on a digital platform through his mobile. The same mobile is used by the motorbiker or the motor driver to buy fuel, to take insurance, to pay, so that there's no need of cash. And this can only happen when we start incentivizing and passing on this service and making it universal in nature.
What sort of incentives would you want from the regulator, the policymakers, as a telco, that would allow you to even play a much bigger role in achieving this dream of cashless economy?
I think what we would expect from the regulator here or the BNR here is more of education being spread across the length and breadth of the country. I think once that is done, I think we are in it, because we ourselves know that we have three basic modes of driving revenue. One is the GSM, which is the calling, second is internet, and third is mobile financial services. The world over, we see that the GSM calling will start to decline because internet will be the source of calling going forward, OTT services will come and play. But I think mobile financial services will be the key revenue driver or the key proponent in driving the business of mobile companies. So I think it's all about awareness. If we can spread awareness, we can do joint programs. Like we've done programs with Ministry of Finance. We are doing a long-term savings schemes, which is an extension of the pension scheme. We are doing programs with AFR, which is access to finance in Rwanda, wherein we are also doing programs with GSMA on women empowerment, wherein we are saying that the more women get involved, or the lesser advantaged or lesser privileged, like refugees. I mean, that's also an economic segment. And if we can ensure that they can transact, or they can buy services, they can buy utility services, they can cash in, cash out through the mobile platform. I think that is where I think these are very clear examples that we have undertaken in the last 1 year or 1.5 years. That is where if more awareness spreads, I think
then there'll be results. I was expecting him to say that we want to import duty-free some of the point of sales and stuff like that.
In fact, the government has done something, for example, in terms of fiscal incentive, for example, we've seen, for example, the point of sales importation being exempted from
exempted.
Yes, so just to bring down the costs. So we've been even discussing with the industry to say maybe in the short run, at least to see how we can reduce the cost, just to so that people can understand at least the benefit of it. In the past, we have to understand where we are coming from.
Sure.
In the past, we didn't have these services. So the problem was, first of all, to say, can you have access? Yeah. Imagine, for example, to send money from here to a certain remote area, it was not easy in the past. So now you have the service. The next question is now, say, how affordable it is. So that's something now we are discussing, and we need to look at the entire value chain, how efficient we are operationally on the service providers side, which is very important as the cost goes down. Of course, also the fees will also go down. Another part which is very important, the cashless is also linked to financial inclusion. We also look at the different segments of the population. When you talk, for example, about merchant, they don't have the same need, they don't have the same problem. So how do we come up with a kind of segmented strategy to address the issues of all these? So these are something we are discussing with the industry as we are putting that infrastructure, but also the demand side also, see how we can influence merchant consumers to adopt.
Right. But as you say that these incentives are available, they have been done, how do you explain? Because we have people among the public who are fully embracing this cashless dream, and they want to walk into a supermarket without any cash in their pockets, but they know that in their phone they have money in their wallet, in their mobile wallet, only for them to get onto the queue and they're told we don't accept mobile money, payment system.
Of course, this is a two-sided market. Yes. When we want really to move on, you need to work on consumers and merchant. There's someone paying and someone accepting. So what we've done is at least to say, okay, let's make sure that we come up with a non-discriminatory regulatory framework. If, for example, you're paying with cash or paying with another instrument, you pay the same amount. So nobody is surcharged, at least today in Rwanda. But on the other side of merchant, there is a cost. There is a cost. And they forget that there is also a cost for cash. So what is important here is that education, that's one, but also to make sure that we work as an industry to come up with a reasonable fee that both the merchant and the service providers can agree on and ensure that nobody is losing in this process.
Right.
So that's what we are doing to make sure that at least we come up with a reasonable, but also understanding on the other side the cost of cash.
The idea is to evolve
the
journey.
I think that's very important. There is in fact, 2 weeks back, I went to a merchant I was just buying, and I wanted to pay with cash. Sorry, with mobile money. He was not accepting. We had a chat, and throughout the discussion, he told me, by the way, I understand now the cost of cash because I have one of my staff who has just opened another shop on the other side because of my money. So, yes, they are losing a lot of money on the other side. So how do we also, on the other side, educate merchants to understand that this is the cost of cash? By moving from cash to a non-cash payment instrument, you will be saving this amount from the government, business, even consumer. The time we are getting to another era where time is now very essential. Yes. So how do we make sure that people understand that they don't have time to lose, they don't have to go to queue to a bank, yet they can go and they do all the transactions digitally. For example, apart from other financial services, I don't remember when I've been in a bank. It's an example, so even others can do the same.
See, the idea is,
go ahead.
So the idea is that we have to constantly keep on innovating, constantly keep on making lives easier for our consumers and the public at large. For example, I'd like to give 3 examples here. The first example is that if I'm a consumer and I was to take a $10 loan, it would be practically a logistical nightmare for me as well as the bank. For me to go and produce documents because of my social economic strata in the society, and secondly for the bank to approve your credit worthiness and ensure that such a small amount of loan is given. So what we do is we ensure that we tie up with financial companies or microfinancing companies and ensure that small personal loans are being given. That is a way of incentivizing the customers to start believing in this service and start using it for other utilities and services. The second option being that we are a country which is fairly large in nature, and we need to ensure that this is convenient. So at your doorstep or as soon as you walk out, you get an agent from which you can transact. For that agent to be able to do rebalancing of e-money and float, which is cash, he needs to have a bank close to him. So we ensure that we are very strategically located. And the third is that you drive services on all levels. You don't confine yourselves to being a microfinancer or being a cash in, cash out. You touch each strata of the segments.
Right.
So if I'm going to a hospital, I don't need to pay cash. If I go into a restaurant, I don't need to pay cash. If I go to a bar, I don't need to pay cash. So that's the idea.
So
that's the idea.
Adding value added.
Adding value to the services that you're offering.
Can also boost.
Yes. Isaac, I want to bring you in here. We seem to be hearing a lot of flowers being thrown on this whole idea of cashless. What is your biggest reservation towards this whole idea of going cashless?
Cashless, there are advantages and disadvantages to every, especially large-scale transition. But I think that really what we're talking about is dealing with new problems as opposed to old ones. When we're talking about going cashless, convenience is outstanding as the most, the biggest impact on the entire ecosystem. Security becomes a conversation as well that we've touched on before, but not because it's unique with cashless economy. It's just new and different security concerns. Right now, as we're talking about things like fraud, theft, money laundering, these conversations keep coming up when we talk about a cashless economy. But still, globally, the culprit, most guilty or most used when we're talking about fraud, theft, and laundry is cash. So when we're talking about now cashless economy, people are concerned about cybersecurity, we're concerned about hacking, we're concerned about identity theft. Even oversight is a concern. But all those concerns are real in a cash-based or a cash-based economy. I think that the biggest, I'll keep coming back to it, the biggest concern is moving a culture, moving a community from one framework, one mindset into another one holistically, because this takes a lot of time. This takes a lot of investment. And we have different stakeholders with different interests who would like the process moving at different speeds. I think that those would be the biggest threats and not threats, but difficulties. And I think that if we're making an active, consistent effort to address consumer education and financial literacy consistently, starting across the board, not going top down, but looking into grassroots, looking into the youth, young minds, because when we start doing things like that, we impact the culture for the next 15, 20 years.
Super. I'll take that as your parting shot. Amit, I want to read your thoughts on your closing remarks. Where do we go from here? Next time we meet, where do you think we'll have reached as far as Airtel Tigo is concerned in complementing the government in this particular dream of becoming a cashless economy?
So I would clearly say that we are on this journey, and we have our sights on, we have our clear sight on getting the population at large to be completely cashless. And I'm sure it will not, it sounds easy, but it will take a lot of effort, time and energy before we get there. But I think the entire ecosystem, we would be right from building these robust systems to being a part of including people in the financial inclusion, educating them about the various services, getting them convinced of the trust that they feel is still a question mark on when you're trading on mobile money. I think we will touch all facets and come out stronger.
Right. John, you seem to have partners here ready to support in this, but the key thing that is common to those last statements here was the word time. And when we say 2020 and we say 2024, are these realistic targets? You feel Rwanda was going to make it?
Yeah, I think what we have is through different strategies we have, which in fact converge, being Smart Rwanda, being a particular strategy for payment system. We have clear indicators of what we want to achieve at that time.
Yeah.
So, and when I look at where we are in terms of development, I can say that we are on a good track. So we'll be able to achieve the target fixed through different strategies we have had.
Right, perfect. I want to say thank you for making time to be with us on this very important conversation. And to our viewers who have been watching us, thank you so much for being a part of the conversation. It doesn't end in these four walls. It does continue on our social media platforms, as we said earlier on. CNBC Africa, that is our Twitter handle, or tweet me directly at Eugene Anangwe. That's it on this special edition. We'll see you again next time. Goodbye for now.